So first, we look at for what instances or what situations that we could use CVP analysis, right? So first, before we moving to the theoretical aspects, the concepts, or the equations, calculations, so you should know in what circumstances or in which situations that we could use CVP analysis, right? So these are some of the examples. So there can be many situations which you can use CVP analysis, but I'll show you some of them, right? So first we'll look at this one. So what is this? So how will Sri Lankan Airlines profit change if it cancelled an existing flight on the Colombo to London route because of rising fuel cost? Right? So that is, so when you consider Sri Lankan Airlines, so they have lot of flights, right? Lot of routes, right? Maybe they go to Australia, UAE, America. So there are a lot of destinations that Sri Lankan Airlines operates, right? So when you take Sri Lankan Airlines, so as a whole, right? So Colombo to London route is one of it, right? One of the routes is Colombo to London route. So if you stop, if Sri Lankan Airlines stop Colombo to London route because of rising fuel cost or any other reason, right? So what will happen to the total profit, or what is the impact to total profit because they stop Colombo to London route? So that could be answered through CVP analysis, right? That could be answered through CVP analysis. So that is one instance. So what will happen to Sri Lankan Airlines profit if they stop a flight from Colombo to London route, right? So that is one instance. Then the next one, so you can imagine any concert, right? So what will happen to a particular concert or any event, right? Any event, right? If there is a 10% increase in the number of tickets sold, right? So you plan that you want to sell only 1,000 tickets, but there may be 10%, the high demand for that concert, right? So 10% increase. So that's mean another 100 you have to print and you have to sell. So therefore, so what will happen to the profit? So what is the impact to profit, or what is the change of profit if there is an increase in number of tickets sold, right? So that could be answered through CVP analysis. That is another instance, right? Then the next one. So how many people need to attend Bhati and Santosh concert before the promoters start making profits, right? So not only Bhati and Santosh, so you can consider any concert or any event or anything, right? So when you produce any product, right? So you can consider this one. So how many people or how many units that you have to produce, or how many people need to attend for a particular concert before the promoters start making profit. So in other words, what is this? In other words, what is this? In other words, what is this? How many people need to attend Bhati and Santosh concert before the promoters start making profit? What does it mean? Hmm? It's very simple.
To cover the cost.
Sorry?
To cover the cost of their concept.
Yes, you have to cover the cost, but in other words, so here it says how many people need to attend a particular concert before the promoters start making profit, right? So that is the point which you start making profit. So that point we call as what? Yes, so Asita is correct. So break-even point, right? So you have to cover all of your variable costs, right? Using your sales, right? Selling price, right? So before promoters start making profit means, so until that point, so you are in loss-making situation, or your product is a loss-making one. So after that, after break-even point, you are earning profits, right? So that's what explained here. So how many people need to attend this concert before the promoters start making profit, right? So promoters start making profit. So after the break-even point, so break-even point means you don't get any profit, you don't have any loss, right? But you get a profit after or the beyond the break-even point, right? And also, will your answer change if the location of the concert is moved from BMICH to Premadasa Stadium? So this also you can answer through CVP analysis, right? So we call sensitivity analysis, right? So in sensitivity analysis, so you can vary lot of variables in the profit equation, and you can check what happened to your profit, or the impact on your profit, or the change of your profit, right? So those things can be answered through CVP analysis. So these are few examples. So I want to emphasize, so you should not learn certain management accounting techniques or theories or concepts without knowing practical application, right? So you should know how these theories, how these concepts should apply in practical situations, right? So I know in many organizations, especially, so we have visited MAs, right? So in MAs also, so they use this break-even analysis when they get an order, right? So um, how many units, how many trousers, maybe any cloth, right? So how many units that they have to produce before making the profits, right? So they must calculate that one, because it's very important, the break-even point, right? So those things can be answered through CVP analysis, right? So that is the background. So first look at what is CVP analysis. So cost volume profit analysis is a technique used to examine the relationship among the cost, volume and profit within the relevant range, right? So here these statements are very important, right? So first one is relationship. So in CVP analysis, you are going to study about the relationship among cost, volume, and profit. Also, this is very important, relevant within relevant rate, right? So that is when you consider this, we can draw this one using a graph. So this side volume, this side cost and revenues, right? So you know how to draw a total revenue line. So this is your revenue. So this is your cost, right? So why we start here? The cost line. So this is your total cost line. This is your total revenue line, right? So this is your break-even point. So why did we start total cost from here. Why? What is the reason? So I explain these things when I explain cost structures, cost behaviors. Yes. So because of fixed cost, right? So fixed cost represent from here to here, right? So therefore, even though you don't sell or you don't produce any unit, you have to incur this fixed cost. So that's why you start your total cost from here. So the break-even CVP analysis is you study the relationships among cost, right? Volume, this side volume, right? This is volume. And profit. So profit means the gap between TR and TC. This is your profit. This area is your profit, right? Beyond this point, you are earning profit within the relevant range, right? So because when you consider the fixed cost, right? So fixed cost is fixed within a particular relevant activity range, right? So this relationship also we study within a particular relevant activity range. So within this range, so our total revenue behaves like this, total cost behaves like this, right? So therefore, our break-even point is this. But maybe beyond that relevant range, so these curves behaves in different manner, right? So therefore, relevant range is very important. So maybe your relevant range is 0 to 1,000 units or 0 to 5,000 units. This is your relevant range, right? So these terms are very important. So cost volume profit analysis means you study the relationship among cost, volume, profit within the relevant activity rate, right? So that is about CVP analysis. Hope you got it. So the same thing, right? And also importance of CVP analysis, right? So CVP analysis usually described as a short-term decision tool, right? So this is very important. So CVP analysis we use especially in short-term decision making, right? Usually, it says usually you use CVP analysis for short-term decision making. So common application we call as break-even analysis. So using break-even analysis, you can find out many things, right? So level of sales to achieve a target profit. So if tax impacts how much of units that we should produce. So the break-even point in units, break-even point in rupees, margin of safety, right? So many things can be calculated through break-even analysis. So therefore, the common application is break-even analysis. And the other point is you can use CVP analysis to plan future operations, right? So for an example, at the beginning I told sensitivity analysis. So in sensitivity analysis, you can find what is the impact to your profit if you increase your sales volume. If you increase your selling price, what is the impact to your profit? So if you reduce your variable cost, what is the impact to your profit, right? So if sales volume drops, if selling price increase, if selling price decrease. So many things can be applied in sensitivity analysis, and you can find out impact to your total profit, right? So to plan future operations, so you can use the sensitivity analysis and you can find the impact to your profit, right? So for an example, maybe you next quarter, you want to increase your sales, right? You want to increase your sales, or if maybe you want to increase the selling price, right? You want to increase the selling price. So you can predict if you increase the selling price, what will be the impact to your total profit. So once you increase the selling price, maybe the demand drops, right? Maybe demand drops. So you can predict that one and you can analyze it and you can say So this is the impact to total profit if we increase our selling price, because increase in selling price will impact on different aspects, right? So those things can be done through sensitivity analysis. So that is another point. And also here it says to guide other decisions. To guide other decisions like strategic decisions. So I told you, basically, usually you use CVP analysis for short-term decisions, but for strategic decisions also, you can use CVP analysis. So for an example, if you want to add a particular feature into your existing product, so it's not a short-run decision, right? So it's a strategic decision, long-run decision. So therefore, using CVP analysis, so sometimes you can answer, or you can take strategic decisions also, right? So this is very important, right? So put an asterisk mark. So what are the importance of CVP analysis, right? So put an asterisk mark for this and study this one thoroughly, right? Okay, so then the next point is, so understanding cost behavior is very important in CVP analysis, right? So what is cost behavior? So cost behavior means you should know the cost structure, right? So cost behavior means you should know the cost structure. So in CVP analysis, the cost structure is very easy. So you can divide your total cost only into fixed and variable portions, right? When you take total cost, the total cost comprises of variable and fixed. So there are no semi-variable, no semi-fixed cost, right? So therefore, understanding cost behavior is very important in CVP analysis. So that's mean you can divide your total cost only into variable and fixed cost. So you have to ignore there are semi-variable, semi-fixed cost, right? So that is another point that you have to remember. So you should know the behaviors, right? So this is the total fixed cost behavior. So I explained these things under cost behavior, right? So when you consider the activity levels, right? Maybe production, maybe sales, maybe machine hours, right? So based on the activity level, so fixed cost does not change. But so when activity changes, the unit fixed cost decreases. So that is one point. Then the other point is variable cost. So total variable cost varies with the number of units, but unit variable cost is fixed, right? So those four behaviors should be known, right? So you should know thoroughly about these four behaviors, right? So how total variable cost behaves, how unit variable cost behaves, how total fixed cost behaves, how unit fixed cost behaves, right? So that is the behavior that we consider under CVP analysis. Then profit equation. So how do you calculate profit? How do you calculate in simple way? How do you calculate profit?
Less expenses.
Speak loudly.
Income minus expenses.
Income minus income minus what?
Expenses.
So please put it in the chat box. Others also. So how do you calculate profit? How do you calculate profit? From total revenue, you have to deduct total cost, right? From total revenue, you deduct total cost. So that's how you decide profit, right? But in CVP analysis, right? So we analyze this one further, right? So you can see, we can write down this total cost, right? We can write down this total cost like this, because we know in CVP analysis, total cost can be divided only into variable and fixed. So therefore, we can write this one like this. So total revenue is TR, right? So this total cost, we can write total variable cost plus total fixed cost, right? And what you do next is you multiply these two figures by minus, right? Once you multiply this one, you get TR minus TVC minus TFC. For this part, we call contribution. If you deduct your total variable cost from total cost, we call it as contribution, right? This is the central concept in CVP analysis, right? So in CVP analysis, so you must calculate contribution, right? Otherwise, you won't get marks, right? At the examination also, if you have a question from CVP analysis, so the contribution is the central concept. So therefore, you have to calculate contribution, right? So you can find out the contribution like this. So therefore, you can write profit like this, contribution minus TFC, right? So profit in CVP analysis is not total revenue minus total cost. So in CVP analysis, profit means from the contribution, you deduct your total fixed cost. From the contribution, you deduct your total fixed cost, right? Okay. So what now you have to do is, so now you know profit is contribution minus TFC, right? So to get the profit, so you should have a bigger contribution with compared to fixed cost. So what is the loss situation? So take this equation and tell me the loss situation. So profit means, so if I explain profit like this, right? Profit means if contribution is greater than fixed cost, then you get a profit. So loss, what is loss? Loss, how do you write? How do you write loss using this equation? If contribution is less than fixed cost, right? If contribution is less than fixed cost, so we call it as, if contribution is less than fixed cost, this is a loss situation. So then break-even point. Break-even point. Write down break-even point. Break-even point. Okay. Others, contribution should be equals to fixed cost. So that is break-even point. Contribution equals to fixed cost. So you can write down these three equations using this. Okay. Clear? So this is a online session, right? So can you please talk bit, right? So when I ask a question, so if you can switch on your mic and answer, so that could be better, right? Because so this is like something I talk, right? So it's boring, right? So therefore, please interact with me. So without putting your answers in the chat box, so you can talk, right? Few people can talk, right? So please respond quickly to my questions, right? Okay. Then the next one, contribution. Contribution, sometimes we call it as contribution margin. So contribution is the difference between sales value and the marginal cost, right? So from the total revenue, if you deduct all of your variable costs, you get a contribution. So this is the concept, central concept in marginal costing. Then the next one is contribution margin ratio. So sometimes we call it as contribution to sales ratio. Sorry. So please write down those terms, contribution to sales ratio. So sometimes we call profit volume ratios, PV ratio, right? Profit volume ratio. So contribution margin ratio or PV ratio or CS ratio means the relationship between selling price and contribution, right? So relationship between contribution and selling price as a percentage, right? So contribution divided by sales into 100. So maybe contribution per unit, selling price per unit into 100, right? So this ratio shows the relationship between sales and contribution. So if contributions sales ratio is 40%, so can you interpret this? Tell me what is 40, what is 100. So can you interpret? If CS ratio is 40%, so please talk. Please interpret.
Ma'am, sales 100, contribution is 40.
Yes, when sales 100, contribution is 40. So then what about the other parts? So from this percentage, so you can talk about contribution, you can talk about sales, and what else?
Fixed cost plus profit or loss is going to be 60%.
No, because this is a relationship between contribution and sales. So there is no link with fixed cost. But through this percentage, you can talk other things as well. Other aspect, other variable. What is it?
To earn a profit.
Variable cost
No, yes,
Well-
variable cost.
is 60%.
Okay, so the other students, what do you want to emphasize?
To earn a profit, fixed cost should be less than 40%.
Okay, very good. Right, so both answers are correct. So when you interpret, so if contribution is 40, right? So if sales equals to selling price is 100, when selling price is 100, your contribution is 40. So that's mean the gap 60 is variable cost, right? The gap 60 is variable cost, right? So sometimes in some questions, so you don't get total sales, you don't get total variable cost. So you should be able to derive those things using this ratio, right? So that's why the interpretation is very important. So sometimes you have to find out the variable cost, but you get only this, right? So therefore you should know the 60% is the variable cost, right? From 100, 60% is the variable cost, right? So then if you can interpret these things easily, then you can work out the questions, right? So that's how you have to interpret CS ratio or PV ratio. Okay, so let's do this question. So please try this one. So Sri Lanka Private Limited is engaged in manufacturing baby care products. Following information is relevant for a tablet of baby soap produced by the company. So you can see material cost per unit, labor, other variable costs, total variable cost. Selling price is 100. So fixed overhead cost is 15 million, right? During the month of September, this company produces 1 million tablets of soap. So you have to find out the total contribution. This is total contribution and CS ratio. Find out these two things and tell me. Total contribution, how much the total contribution?
75.
Sorry? I'm asking total contribution, not the unit contribution.
75 million.
75 million.
75 million, okay. Right, then contribution margin ratio,
75%.
35%, okay. So let's see. So contribution, how do you calculate contribution? From this selling price, you have to deduct the variable cost. Then you get 75. So CS ratio is 75 divided by selling price, right? Selling price 100. As a percentage, you have to show it. So therefore, CS ratio is 75. Then the total contribution is, so 75 into this, how many units you produce? 1 million, 75 million, right, correct, right? So that is the first answer, okay. Then the second one, find out the operating profit of Swadeshi for the month of September. So find out the operating profit,
60 million.
yes. So the total contribution is how much? 75,000, 75 million.
5 million.
Right? So from the 75 million, you have to deduct
Total fixed cost.
total fixed cost. So this one you have to deduct from the total contribution. Then you get 60 million. 60 million. Right? Clear? So these are very simple examples, right? Okay. Everyone clear?
Yes.
Then the next one. Right? So if you don't answer, right? So I will move, right? So therefore, please, if you have any questions, so you can talk, right? Question me. So break-even point. The break-even point is the level of activity where an organization neither enjoys any profit nor incurs any loss, right? So you can see break-even point means where you don't get any profit and you don't incur any losses, right? So in other words, total revenue equals to total cost. Break-even point is decided on how revenue and cost behave according to the activity level. So that is what I showed you earlier at the beginning. So break-even point means so how the revenue and costs behave according to the changes in level of activity. So when units changes, your revenue changes, right? When sales increases, your revenue increase. When production units increases, your total cost increases, right? So likewise, so break-even point decides how break-even point decides. So when volume changes, your revenue changes, also your total cost changes, right? So therefore, the break-even point is something what you should know is when production or sales changes, according to the changes in production or sales, how revenues and costs behaves, right? So that is what explained by break-even point. And a few points to remember. The break-even value can only be calculated as an approximate figure. Why? Why? You can express break-even point as an approximate figure. Why is that? So why didn't we express break-even point as, for an example, we'll say 100.75 or 100 and 1/3. So why don't we explain break-even point like that? We always explain break-even point as an approximate figure. So why? What is the reason? So Nirosha explains we do the calculations based on assumptions. No. And Inoka says not present situation, it is future figures, imagine figures. No, not that. So very good that you try, right? You are trying, but that's not the exact answer. So without trying, you won't learn, right? So therefore, please think. So why we express break-even point as an approximate figure? So why we don't express break-even points as decimals? Then another 1/3, 2/3, ඔය වගේ අපි අය කියන්නේ නැත්තේ. භාග වශයෙන්. Yes, because those are units, right? Very good, Madhava. So we cannot say, for an example, so if we want to find out, so how many, so this is a ceramic cup. So how many cups that we should produce within a particular period to break even, right? So you have to say 100 cups. So you can't say 100 cups plus 1/3 of a cup, right? So you don't say 100 cups plus 0.33. So you don't say like that. So you always express it as an approximate figure because you have to produce the full product. right? The full product. Product එකෙන් කෑලි නෙමෙයි අපි කතා කරන්නේ. Full products නම් කීයක් අවශ්‍යද කියන එක, right? So therefore, always you produce approximate figures when you express your break-even value, right? Okay. And also it says it is meaningful to express the break-even point in a range of values. In a range of values. So you express break-even point in a range of values. So when you draw this one, this is total revenue, this is total cost, this is your break-even point. So you express my break-even point is 100 units within the range of 0 to 500 units. 0 to 500 units, my break-even point is, we'll say 200. So why you express break-even point within a range? Within a range, why? Can someone answer for that? Yes, yes. Charuni says because fixed cost is incurring. Yes, because when you calculate break-even point, so you have to consider fixed cost. So as I mentioned earlier, so fixed cost is fixed when we draw this fixed cost diagram. So fixed cost is fixed within a particular relevant range. So beyond this point, right, beyond this point, fixed cost may increase. Fixed cost may increase. So therefore, always you have to express your break-even point within a relevant range because in that range, your fixed cost is fixed. So beyond that range, your fixed cost may increase. So therefore, always you have to express the break-even point in a range of value. So you have to say, my break-even point is 200 units within the range of 0 to 500 units. Because after 500 units or beyond the 500 units, your fixed cost may increase and you get another break-even point, right? So therefore, you have to express your break-even point using the range of values, right? And the other point is in real life situation, computation of the break-even point will have to be done with suitable assumptions, right? So let's look at the assumptions. All costs can be classified into fixed and variable elements, right? So this is very important. So you know, so when we talk about assumptions, we know there are some limitations, right? Or weaknesses. So you have to write down weakness of these assumptions, right? Because at your examination, we may ask assumptions or weaknesses of CVP analysis. The weaknesses of foundation assumptions in CVP analysis. We may ask both, right? So therefore, you should know the weaknesses of these assumptions because I'm not going to explain those weaknesses separately. So therefore, when I explain these assumptions, right, I explain the issues of those assumptions. So those things you have to write down, right, separately. So all costs can be classified into fixed and variable elements. So what is the issue of this? What is the issue of this?
There are some semi-variable costs and fixed
Yes,
cost.
there are semi-variable, semi-fixed cost, right? In practical situation, right? So when you take telephone bills, when you take electricity bills, when you take any other bills, right? So you can find both portion, fixed and variable portions in one element. So therefore, so we ignore these semi-variable, semi-fixed cost under the CVP analysis. So that is the issue, right? So that is the first one. Then the second one, total fixed cost will remain constant at a given capacity, right? So within the range, fixed cost is fixed, right? But beyond that range, fixed cost will vary, right? So then you get a different break-even point, right? So you know the issue of this is, so always you have to assume that fixed cost is fixed within a given capacity. Beyond that point, the fixed cost may vary, right? It's a variable cost. Then variable costs vary proportionately with changes in volume. So that is okay. We know variable cost, the behavior of variable cost is this. Variable cost varies with the level of activity. Production when පුළුවන්, sales when පුළුවන්, variable cost varies with that, right? Then selling price, variable cost per unit, fixed costs are all known and constant. What is the issue of this? What is the issue of this? Selling price, variable cost, fixed cost should be known, and also we assume that they are constant.
These are future figures.
Yes, you know, because we can't expect selling price is fixed. We can't expect variable costs are fixed, right? Because so according to the environmental conditions, right? So because the environment is changing rapidly, so many macroeconomic factors impact your pricing. So therefore, we cannot expect selling price is fixed. We cannot expect variable cost is fixed. Also, fixed cost is fixed. So therefore, it's a kind of a issue, but we assume that under the CVP analysis, right? So that is another assumption, and you should know the issue of this. Then over the activity range being considered, cost and revenue behaved in a linear fashion, right? So always when I draw these lines, so I draw a straight lines, right? So this is total revenue line, this is total cost line, right? So this is variable cost line. So always I draw straight lines. So here we assume in CVP analysis, all these costs and revenues behave in a linear fashion, right? So not like curves, but you know, in economics, you have learned, so they behaves, the revenues cost behave in a curvilinear fashion. Curvilinear fashion. Actually, those curves behaves in a curvilinear fashion, not straight lines, right? But here we assume that these are behaved in a linear fashion, right? So that is another issue. In practical situation, the cost revenues behaves in a curvilinear fashion, right? So something like this one. So you can see the curves. So cost function is like this, right? So sometimes when you draw a revenue line like this, so you may get different break-even points if it is curves. If it is curves, if it is a curve, you get sometimes two different break-even points. But if you assume they are in a linear fashion, you don't get two different figures. You get only one break-even point, right? So that is another issue, right? Then the next one, the only figure affecting cost and revenue is volume, right? So you don't consider the technological changes, production methods changes, right? So you always assume those are unchanged, those are fixed, right? Technology does not change. Production methods, no change. Efficiency remain unchanged, right? But you know, in practical situations, we can't expect these things, right? So that is another issue. And the other one, time value of money is ignored. What does it mean? time value of money is ignored. මොකද්ද මේකෙන් කියවෙන්නේ? Time value එක ignore කරනවා interest. So last time you have done capital budgeting, right? So maybe sir may talk about this time value of money.
Madam, it's the cost of capital, no, we ignored.
Yes, so you ignore the cost of capital. So that means cost of capital is how much? Cost of capital is ignored. So therefore cost of capital equals to කීයද cost of capital එක වෙන්නේ? Inflation එක consider කරන්නේ නැත්නම්. So it's equal to 0. So you don't consider the inflation, right? So you don't consider the time value of money, right? So that means cost of capital is 0. There are no changes in stock levels. No changes in stock levels. So you don't have stocks. So what does it mean?
We sell all we produced.
Yes. So production equals to sales, right? So all production units you sell, right? So therefore, that is number of units produced equals number of units sold, right? Okay. Give me 1 minute. Okay, right? So the next point is break-even analysis can be done in 2 ways. So do you have any questions regarding these assumptions? Do you have any questions? Yes or no? So what you have to remember here is when you study the assumptions, so you should know the issues of these assumptions as well, right? So therefore, write down the issues under each aspect, right? Because sometimes we may test the weaknesses, right? Okay. Then the next point is break-even analysis can be done in 2 ways. One is equation approach, other one is a graphical approach, right? Equation approach and graphical approach. So please write down this one. So you need separate paper for this, right? So assume selling price equals capital P, quantity equals capital Q, fixed cost equals FC, variable cost per unit equals simple V, contribution per unit equals simple C. Okay. Construct following functions, TR. Construct following functions, TR. So TR you can write like this, P into Q. Then next variable cost. Variable cost is simple V into Q. Simple V into Q. Variable cost means simple V into Q. Then the next one, total cost. So total cost means the fixed cost plus variable cost, but you know you wrote variable cost as simple V into Q, right? So simple V into Q. So therefore, you can write total cost like this, simple V into Q plus FC. Then the next one is profit. So how do you get profit? So normally from total revenue, you deduct total cost. But here you have TR as PQ, right? You can write that one. TC means this equation, right? So you have to write that one. TR means PQ minus this minus. TC means V into Q plus FC. So now you can multiply this one by minus, right? PQ minus VQ minus FC, right? Then you have two cubes here, right? So take Q out, then write the equation again. So once you take the Q out, you have P here and you have V here and minus FC. So this part we call as what? So what is this? Selling price, this variable cost. So this one we call as what?
Contribution.
Contribution. So therefore we can write this one as you can write this one as Q into C. Contribution is simple C minus FC. So now your profit equation is this, right? So you have to derive through these letters. So now what we try to do is we are trying to find out the break-even point. So at break-even point, this profit function is equals to what? At break-even point. What is break-even point? No profit, no loss. So therefore, at break-even point, so this profit function equals to what? Zero, right? It should be equals to 0. So therefore, you have to write, so C into Q minus FC equals to 0. Profit is equal at break-even point, profit equals to 0. So now we are going to find out break-even point in units. So if you want to find out units, so in this equation, you have to keep which letter? Which letter? To find
Q.
out units, yes, you have to keep Q here, right? So therefore, keep Q here and take other things other side, right? So therefore, FC, it becomes plus and this one you have to divide. So this is your break-even point. So break-even point in units means fixed costs divided by contribution per unit. At break-even point, so units equals to fixed cost divided by contribution per unit, right? So this is how you have to derive it, right? So now you can write down your equation. Break-even point in units is fixed cost divided by contribution per unit, which you derived from here. And also break-even point in rupees means fixed cost divided by CS ratio, right? Clear?
Yes, madam.
Okay. So then let's do this one. So using the information given in activity 1, find out the break-even point both in units and sales value. So you did a activity earlier. So this one. So in this activity, for find out the break-even point in units and rupees. Take 2-3 minutes and find out. Once you finish, tell me, right? So tell me the answer, right? Break-even point in units, 200,000. In rupees? In rupees? Ayantika, Ishanika, so okay, so 200,000 in units. Okay, right, 20 million, right? So it's easy because to calculate the break-even point, you need contribution per unit. So contribution per unit is from selling price, you have to deduct the variable cost. So that is 75 per unit, right? So that one you have to divide by the fixed cost, right? So fixed cost is 15 million. 15 million you have to divide by 75, right? Then you get the break-even point. So that is 200,000. So 200,000 you have to multiply by 100 to get the break-even point in rupee value, right? Clear? Clear? So those are simple things, right? So break-even point. Then the next one, break-even point extended, profit planning. So level of sales to achieve a target profit. So with a simple adjustment to the break-even point formula can be modified to become a profit planning tool. Profit is now reinstated to the break-even formula, changing into simple sales volume equation, right? So here, so what you want to find out is to achieve a target profit, how many units that you should sell or how many units that you should produce to achieve a target profit, right? So now you know your profit equation is, right? So let's write your profit equation. So your profit equals to contribution per unit into quantity. So this is your total contribution. From this, you deduct your fixed cost, right? This is your profit equation. So here, so this is your profit, but here what you want to find out is to achieve a target profit. So this is your target profit. To achieve this target profit, how many units you should produce, right? So please formulate this equation. So this is your profit equation, but here they ask you to find out level of sales to achieve a target profit, right? So using this profit equation, you can formulate this equation as well. So formulate this one and write down, tell me. So what is the equation that you should write to achieve level of sales to achieve a target profit? Okay. So that profit plus fixed cost divided by contribution. Correct. Profit plus fixed cost. Yes. So what you have to do is you have to keep Q here and take other things other side, right? So therefore, profit plus fixed cost divided by contribution, right? So this is the equation. Q equals, this is your expected profit plus fixed cost divided by contribution per unit. So if expected profit equals 5, so that's mean this 5, how many units to be produced to achieve the expected profit? So therefore, Q, you have to keep Q here and find out this, right? Okay. Clear? So in words, you can write the same thing like this. Target sales in units, fixed cost plus target profit, contribution margin per unit in rupees ratio, CS ratio, right? Clear? Any questions up to now? Okay, so please try this one. Please try. So what you have to find out is how many masks should be sold during the quarter ending 31st March to reach the business to its break-even point. Then expected profit or loss for the quarter ending 31st March. First, find out the break-even point. then expected profit for a particular quarter. Break-even point in units 300, loss 1 million. Okay, loss 1 million. Okay. Any other answers? Any other answers? Profit 1.6 million, loss 1 million. Okay, so let's look at the answer. So here it says Safer Lanka Limited is in the manufacturing and distribution of branded surgical masks island-wide. The company currently has monthly production capacity of masks, 250,000 masks. It is expected that the company will operate at its full capacity level to accommodate increased local demand. Following forecasted cost and revenue information is providing relating to the quarter ending 31st March. Material, direct other costs, selling price, fixed manufacturing cost, non-manufacturing cost, right? How many masks should be sold, right? So how many masks should be sold during the quarter ending 31st March to reach the break-even point, right? So you know, to calculate the break-even point, you need the fixed cost. So these two figures, so that is 6 million. So both are fixed cost. And this one you have to divide by contribution per unit. So that's easy. So selling price is 40. From 40, you have to deduct this direct cost, variable cost, right? So from 40, if you deduct 20, you get 20. So 6 million, you have to divide by 20 to get the break-even point in units, right? Clear?
Yes, madam.
Okay, so that is 300,000, right? Then the next one, expected profit or loss for the quarter ending 31st March, right? So most of the students answers here 16 million, 14 million, 1 million loss, 1 million loss. So 1 million loss. So it's not a loss, right? Okay, so let's look at this. So expected profit or loss for the quarter ending 31st March. So this fixed cost is for quarter, right? But here you can see the capacity, production capacity is per month. So therefore, this one you have to multiply by 3 to get the quarterly information, right? So in the quarter, you produce 750,000 marks. So that one you have to multiply by contribution per unit into 20 and deduct this one, right? So then you get 9 million. So I didn't get any answer, 9 million, right? So total contribution is 15 million. How did you get that one? So monthly production is 250, 250 into 3, then you get a quarterly production. So that one you have to multiply by contribution per unit. So contribution per unit is 20, right? From selling price, if you deduct this direct cost, you get contribution per unit. So 20 into 750,000, right? Is total contribution. So from that, you have to deduct these 6 million fixed cost. Then you get 9 million. Clear? So there is no answer for 9 million. So I think ignored the quarterly information, right? So this is monthly production capacity. Okay. Clear?
Yes, madam.
Yes, madam.
Then we'll move to the next one, margin of safety. The margin of safety is the excess of budgeted sales over the break-even sales, right? So that's mean this. So you know how to calculate break-even point. So that is, so you have to consider break-even point by drawing these two lines, TR and TC, then you can find the break-even point. So this is your expected sales. This is your break-even sales. So gap between break-even sales and the expected sales gives you the margin of safety, right? So please excuse me. Okay, right? So the margin of safety means the gap between break-even sales and expected sales, right? So why we call this as margin of safety? Because so beyond the break-even sales, you are safe because you are earning profits, right? So this area is profit. So that's why we call it as margin of safety, because beyond the break-even point, you are earning profits, right? You are safe. So that is margin of safety. Okay, so please do this one. Using the information given in activity 3, calculate the margin of safety in units and as a percentage of current sales. Activity 3, find out the margin of safety. So you know the break-even sales. So that is 300,000 units, right? This is break-even sales. So expected sales is how much? Expected sales is how much? What is the expected sales amount? Break-even sales 300,000. Expected sales in this question?
750.
750, because during the quarter you have to produce 750,000 masks. So therefore, your margin of safety is how much?
450.
450,000.
450,000 margin of safety, right? So that is the our first answer for our first question in units, right? Margin of safety in units, and also as a percentage of current sales. So 450, you have to divide by current sales, how much? Current sales, how much? What is the expected sales amount?
750.
750. As a percentage, you have to show it. Okay. So that is the second answer. Okay. How much is the answer? What is the answer?
60%.
50%. Okay. Then the next part. If the quarterly sales volume is expected to drop by 20%, what would be the effect on the firm's profit? If sales volume decrease by 20%, right? So what will happen to your profit? What is the effect to your profit? How much? Yes, profit reduced from 9 million to 6 million, so reduced by 3 million, correct? Right, so correct, because so new sales volume is from 750, 80% is 600, right? So the margin of safety is 300, so 300 into 20. You get 6 million. So this is contribution. But earlier it was 9 million. From 9 million, if you deduct this 6 million, so now it is 6 million. Earlier 9 million. So the profit reduced by 3 million, right? So that's how you have to answer. So these two things also you answered. So if sales volume drops, right? So you have to find out new sales volume first, right? Then you can find out contribution. So from the contribution, you can deduct the fixed cost. Then you can find the new profit. So you have to compare new profit with the earlier profit, right? Clear?
Yes, madam.
Okay. Then the next point, income taxes in CVP analysis. Income taxes in CVP analysis. So, income tax impacts on profit, right? So therefore, the same equation, fixed cost plus target profit divided by contribution. Earlier we used this same equation, but now you have to apply the tax rate. So therefore, here you have to take target profit after tax divided by 1 minus T. So if tax rate is 25%, you have to take 1 minus 25%, right? So to find out the sales volume in units, you have to divide by contribution per unit. Here, CS ratio. But the only change occurred in this equation is here. So you have to find out target profit after tax and divided it by 1 minus T, right? Okay, so use the information in activity 1, not the activity 3. Go to the activity 1, right? Suppose that the management of Swadeshi Limited wants to find the number of tablets of soap that should be produced and sold to generate an after-tax operating profit of 4.5 million, right? The tax rate is 25%. So find out the units. Quickly do this. It's easy. Go to the activity number 1. So here after tax operating profit is 4.5 million. For this, you have to apply this one. So other things same as earlier. So what you need is, so you need the fixed cost plus these two things and divide by contribution per unit, right? So in activity 1, go to the activity 1. Here. So activity 1, the contribution is 75. Fixed overhead 15 million. So 15 million plus within brackets, you have to take the what do you call here 4.5 million divided by 1 minus T, right? Did you get this answer?
Yes, madam.
Yes, madam.
So, fixed cost is 4.5 million, right? 4.5 million. So plus this one, fixed cost is how much?
15 million.
15 million, right? Not 15 million, but the profit after tax is 4.5 million net. So this one you have to divide by 1 minus T. Tax rate is 25%, so therefore 25. Then contribution is how much? 75, net. Is this correct?
Yes, madam.
Yes.
Yes, madam.
Yes, 15 million. මේවට millions දාන්න. මෙතන 45 million 450,000 නැත්නම්. Oh, 450,000. නෑ. Yes, 4.5 million. Yeah. 4.5 million. 1 minus T to get this one. Right? Then in rupees, what you have to do is this one you have to multiply by selling price. Selling price. Okay. Clear? So these are very simple things, right? Basic things. You should understand the concept, right? Any questions up to now?
No, madam.
Okay, right. So next we have to talk about the multi-product situation, right? So now I think you have the Kalhari has shared your attendance, right? So go to the chat box, right? So there is a link. So using this link, you have to mark your attendance. So it will, so within 30 minutes, you have to mark your attendance, right? So after 30 minutes, so this link is disappear, right? So therefore, please mark your attendance. So now we will have a break. So now the time is 9:38, right? 9:40. So let's start as 10. Shall we start at 10? So,
Okay, madam.
so we'll start at 9:55, right? Take only 15 minutes break, right? So please be present 9:55, okay? So did you get 150? Once you wait under the weighted average method, so you have to wait because inside the package, so there are 4 products, right? So the first one is baby cream. So baby cream is through the contribution is 325, but you have to wait. So this is 325 into 1/4, right? So inside the package, you have 4 products. So there are 1 baby cream. So therefore, you have to divide it by 4. Then similarly, baby soap also, the contribution is 75, but you have to divide it by 4 because 1/4 is baby soap. But when it's come to baby powder, the contribution is 100, but there are 2 products. So therefore, you have to divide it by 2 divided by 4. That's mean half, right? Because from 4 products, 2 is baby powder, right? So therefore, 100 should be divided by 2/4, right? 2/4. Did you get my point? So how do you calculate this 150? Here, weighted average one. Clear? Can you please answer whether you
Yes,
got it or
madam.
not? Clear?
Yes, madam. Clear.
Okay. So then the answer you get here, so when you divide it by weighted average contribution method, then you get not packages, you get units. You get units, combined units. So 480,000 units means, so there are powders, there are creams, and there are soaps. All together, there are 480 units. Now you have to divide it into creams, powders, and soap. So you know 1/4 is baby cream, 1/4 is baby soap, and 2/4 is baby powder. So you can divide it by 4, then you get 120 here. Again divide it by 4, then here soaps 120. Divide it by 2/4, then you get 240. So under weighted average method, you get units, not packages, right? Also you can, but also you can find out the units separately. But in here, under fixed method, you first get packages, then you have to divide it into creams, soaps, and powders. Under weighted average, you get units, not packages, right? Clear? Okay. So shall we move to the next one? So any doubts? Any doubts? Shall we move to the next one? So do you have any doubts about this calculation? Clear? Okay, so please do this one. So this is different question, right? Different question, but the same application. So please try this one. Tell me packages and units separately. So here monthly fixed cost is given. And you are producing two products, prints and enlargements. So different contributions, right? So you can see contributions, but the production mix is how much? 9:1 ratio. So when you do 9 prints, you do 1 enlargement. So that is the production mix, right? So you have to find out how many prints and enlargements must this company should sell to break even. So use the fixed production mix method and tell me the answer. Okay, so there is an answer. Prints 630, enlargements 30. So 700 packages, 700 packs, okay? So if 700 packs are there, so find out how many prints, how many enlargements. Six 6,300 prints, 700 enlargements, okay? Any other answers? Any other answers? Okay, right. So let's look at, so these answers are correct, I think, right? So what you have to do is, so you know the production mix. So to get the contribution, combined contribution, right? The production mix contribution, you have to multiply this by 9 and this by 1, right? Then you get the contribution per package, 260. So this is your fixed cost. When you divide it by 260, you get 700 packages. So you know inside one package, so there are 9 prints. So therefore you have to multiply it by 9 to get the how many prints inside these 700 packages. So inside these 700 packages, you have 6,300 prints and one because one enlargement, so therefore 700 enlargements, right? So this is fixed product mix method. Then weighted average method. Under weighted average method, find out. Under weighted average method, so you have to wait, right? So out of 10, 9 is prints. Out of 10, 1 is enlargement, right? So likewise, you have to get the contribution. You have to wait. How much? Can I get the answer, please? Under the weighted average method. So 182,000, you have to divide by 24 divided by 9. Because there are 9 prints out of 10, no? So 9 divided by 10. Here 44 into 1 divided by 10, right? So this way. Then you get contribution per unit. So here you get contribution per package. Here contribution per unit. Then you get 7,000 units. 7,000 units. So from these units, right, 9 is prints. So therefore, 7,000 divided by 10 into 9, you get this. 7,000 divided by 10, you get 700. This is weighted average. So this is the weighted average, so contribution per unit. So in weighted average method, you get units, right? As I mentioned earlier, you get units. Right. Correct. Right. So your answers are correct. So Ayantika, Ishinika, so your answers are correct, right? Okay. Right. So any questions up to now about the mixed product mix method? Any questions? Okay. So if you don't have any questions, so we'll move to the next one. Then the graphical approach to CVP analysis. So I hope you can remember. So we explained at the beginning, right? We explained at the beginning. I'll show you. So break-even analysis can be done in 2 ways, right? So I explained that at the beginning. So this is the slide. So break-even analysis can be done in 2 ways. One is equation approach. The other one is graphical approach. So we did equation approach, right? We did equation approach. So now we are moving to graphical approach, right? So graphical approach to CVP analysis. So why we explain the CVP calculations using graphs? Because you know when you present to your management, right? So it is easy if you use a graph than using certain calculations, right? So if you want to explain a particular product's break-even point to top management, right? So maybe for an example, we'll assume, so you're going to produce a new product, right? So based on the demand, so you want to find out break-even point, margin of safety, profit. If it is making a loss, how much is the loss? So those things you want to find out. But if you explain those things using equation, using many calculations, so the management cannot understand, right? So it's difficult. But if you can show all these things using a graph, they can understand it very well, right? So therefore, so you use graphical approach to present a particular situation to the top management because it provides a simple overview of a particular situation. And also it shows everything in one graph, right? So without using certain calculations, many calculations, you can understand the situation from one slide, right? So therefore you present all these information using a graph to top management, right? So there are different types of break-even charts. So maybe traditional charts, contribution charts, profit charts. So there are so many charts that you can use to present your information, present your situation using so many graphs, right? So first one is a traditional approach. So under traditional chart, you have to draw these lines. Fixed cost line, total cost line, total revenue line. So I hope you can remember how to draw these lines, right? So this is how we draw. The fixed cost line is this. Total cost line is, it starts from here. Total cost, right? Total cost. Then total revenue line is this. So you can find out, so this is total revenue. This is total cost. This is fixed cost. What is this? What is this? What is this point?
Break even point.
Break-even point. So what is this area? So please speak.
Profit area.
Profit area.
Area.
So what is this?
Loss area.
Loss area. So this is,
Loss area.
yes, this is break-even point. So if your expected sales is, the maximum sales is this. If expected sales equals this amount. So what is this area? What do you call this?
Marginal safety.
Margin of safety, because beyond the break-even point, you are earning profit. So you can see, using this graph, you can show many things, right? So this is a traditional break-even chart. So under traditional chart, you have to draw these lines, right? Then contribution break-even chart. So you know, so I told you, so in marginal costing, in CVP analysis, so the contribution is the central concept. But you can see, so using this graph, you cannot show contribution. You cannot show contribution. Why you cannot show contribution here? Why you cannot show contribution in this graph? Why? I මේ graph එකෙන් අපිට contribution එක පෙන්නන්න බැරි.
No variable cost is there.
Yes, because you haven't shown the variable cost line. So therefore, we use this graph to show the contribution. So this is we call contribution break-even chart. So in this graph, you draw these lines. So total cost line, variable cost line, and total revenue line. So first we'll draw total revenue line. So this is your total revenue line. It starts from 0. Then total cost line. So you know total cost start from fixed cost, total cost line. Then variable cost line. So variable cost line, so goes like this, variable cost line. Right? So similarly, you can show the break-even point here. Okay. So now you can show the contribution. So you know from here to here, variable cost, from here to here, total revenue. So from total revenue, if you deduct this area, you get the contribution. So therefore, contribution is from here to here. So you can easily show the contribution area in this graph, right? So using these 3 lines. Clear? Clear?
Yes, madam.
Okay. So therefore, contribution break-even chart is very important since you can show the contribution in this graph, right? Okay. Then the next one is profit chart. Profit chart, right? Profit chart. So in profit chart, so you draw only one line. So that is profit or loss line. So you don't draw revenue line, cost line, fixed cost line, variable cost line. You don't draw any line. You draw only profit or loss line, profit or loss line. So therefore, your graph should be presented like this, because you cannot show loss using this graph, because this is zero. This is zero. So here you can show profit, but you cannot show loss in this graph. So therefore, you have to draw like this. So this side loss, this side profit. Okay. So profit, loss is here, profit is here, right? So profit volume chart is more convenient method showing the impact of changes in the volume. So this side volume. Under this method, only the profit or loss line is drawn in order to identify the break-even point. Okay. So let's draw the profit line using this information, right? So please read this question quickly. So Shahan Entertainments operate in the leisure and entertainment industry, and one of its activities is to promote concerts at locations throughout the country. The company is examining the viability of a concert in Kandy. Estimated fixed cost is 600,000. This includes the fees paid to performers, the hire of venue and advertising cost. Variable cost consists of the cost of pre-packed buffet, which will be provided by a firm of caterers at a price which is currently being negotiated, but it is likely to be in the area of 100 rupees per ticket sold. The proposed price for the sale of a ticket is 200 selling price. The relevant range is 4,000 to 12,000 tickets. Okay, so these are the information. So fixed cost is 600,000. Variable cost is 100 rupees, because when you buy a ticket, you get a lunch packet. The cost is 100 rupees, variable cost. The selling price of a ticket is 200. The relevant range is 4,000 to 12,000 tickets. So the maximum number of tickets is 12,000 tickets. So using this information, you have to prepare a profit chart, right? Using the information, develop a profit chart, right? So you have to develop a chart like this. So this side loss, this side profit. This is 0. So the maximum level of tickets that you sell is how much? how many tickets that you can sell maximum? How much?
12,000.
12,000. So the
12,000.
maximum level is 12,000. So find out if you don't sell any ticket, what is the loss or profit? If you don't sell any units, any tickets, so what is the profit or loss? First, find out that one. You don't sell any ticket. What is the loss? So you can't gain a profit, no? So loss is how much?
600,000.
Sorry?
600,000.
So it should equals to 600,000 because at the beginning you have to incur the fixed cost, right? So even though you don't sell any ticket, right, you have to incur the fixed cost. So the fixed cost equals to loss. So therefore, at zero level, your fixed cost is fixed cost equals to loss. So therefore, 600,000 අපි හිතමු මෙතන 600 කියලා. So your first point is this. And your last point is 12,000 tickets because you know, so these, we assume that these curves behaves in a linear fashion. So the profit line also behaves in a linear line. So therefore you need only the other point also, only another point to draw your line, right? So you have one line, one point. So the maximum point is 12,000. At 12,000 level, find out the profit or loss. Since this is a linear relationship. $600,000. Did you get 600,000? Make a හරි විදියට mark කරන්න, right? So 12,000 වෙනකම් මේක හරි scales වලට mark කරන්න ඕනේ, right? Because this is a graphical approach. So here also 10, 20, 30, 40, 50. Likewise, no, not 10, 100, 200 or 200, 400, 600 you can take. So what is the amount at 12,000 level? Profit is equals to how much? Others, there is one answer. 600,000. Others also got the 600,000.
Yes.
Okay,
Yes, madam.
right. So profit at zero level, the loss is 600,000. Profit at 12,000 tickets. So you know the contribution is 12,000 is because selling price per ticket is 200. Sorry, 200. So variable cost is 100, right? So the contribution is 100. So total contribution is 1.2 million. From that, you have to deduct fixed cost, then the profit is 600. So you can draw like this. So this point is loss, this point is profit. Okay,
Okay, madam.
so this way you have to draw the profit chart. Loss 600, profit 600. So using a ruler, you can draw this line. So the point which cuts the x-axis gives you the break-even point, right? Okay, so that is about the profit chart. So next time we will do the profit chart using product range, right? So now I want to, so I hope you don't have any questions up to now. Students? So do you have any questions regarding the profit chart? Okay,
Okay, madam.
right. So let's So we will do this one next time, right? But you know, in your slideshow, so you have marginal costing and short run decisions. So I want to divide these 4 questions among you, right? So I got the student list, right? Group 2 student list. So next time you have to do presentations about this, right? So the first one is marginal costing when limiting factor exists, right? So the second one is acceptance of a special order. So this is the question. This is the question. Then the third one is dropping a loss-making product. So this is the question. Then fourth one, make or buy decision. This is the question. So you have 4 questions, right? 4 questions, right? So let's look at the students. Right, so hope you can see. So this is the group number 2. So there are 42 students, right? 42 students. Can you see the student list? Can you see the student
Yes,
list?
madam. You can see.
Okay, so please answer right without putting messages. Okay, so from 1 to 10, so until 10, Anuki. So from 1 to 10, so the first one, first question, limiting factor question, right? Clear? So anyone from this group, please confirm.
Yes, madam.
Okay. So first question, you have to present, right? So limiting factor question. So there are 2 parts, so you have to present that one. Then from 11 to 20, acceptance of a special offer question. Acceptance of a special offer question. So anyone from second group, can you confirm?
Yes, madam.
Then from 21 to 30, that is dropping a loss-making product. Anyone from group 3? Anyone from group 3? Please confirm. Kaurun at the group 3 again. Until 30.
Yes, madam.
Okay, so you all have to do the third question. So dropping a loss-making product. Then so 21 to 42. So you have 12 students, right? You have to do the last one, make or buy decision. So you have to prepare one slide, right? One slide, only one slide, maybe maximum 2 slides to explain that question, right? So everybody should, practice how to present it, right? Because I'm going to ask from your group, I will pick a student, right? So therefore, everybody should learn how to present it. So as a group, please discuss how to prepare the slides and how to present it, right? Then I will appoint one person from one group to present it, right? So then later I will discuss the question. Okay? Agree?
Yes, madam.
Okay.
Yes,
So
madam.
don't prepare many slides. So for one or 2 slides, right? So when you present, you have to switch on the video camera and present it, right? So I know who are the members in first group from 1 to 10. So I will pick up students. So I may ask Dilrukshi to present, right? Then when it's come to second group from 11 to 20, so I will ask Udani to present. So likewise, I can pick, right? So therefore, everyone should learn how to present, because the presentation skills are very important, because at the end you have to do presentation, right? So don't wait until that moment. So please try from the beginning. So how to present a particular situation, right? Small presentation, but you have to practice it, right? You have to practice it, right? So from the beginning, try to improve those skills, right? So not only answering the papers at the final examination, so you have to do a lot of presentations through this course, right? So therefore, try to practice, practice, then you will be able to do it very easily, right? Okay, so I hope you don't have any doubts about the next week's presentations. Clear?
Yes, madam.
Okay, so we can stop at this level, right? So if you don't have any questions.
Thank you, madam.
Thank you, madam.
Yeah.